Hey everyone, welcome back to Corporate Decoder, the place where we crack open those thick corporate filings to see what's really going on. Today we're diving into AIM Pharmaceuticals, and it looks like they've got some interesting numbers to share, especially about their blockbuster drugs. Stick around to find out if they're raking in the cash or just playing pretend. PHARMACEUTICALS INC, exact name of registrant as specified in its charter, all right. So we're looking at an 8K filing from AIM Pharmaceuticals, which is like a snapshot of important stuff happening right now. The main reason they're filing this is to give us a heads up on their latest financial results for the second quarter ending June 30th, 2025. Scroll company expects combined ILUVIEN 2 and Hue net revenues of $22 and $3 million for $32.3 million for the 3 months ended June 30, 2025. And here's the headline right away. They are expecting the ILUVIEN and UTIQ drugs to bring in a cool $22.3 ILUVIEN and UTIQ drugs to bring in a cool $22.3 million in revenue for the second quarter. That's a pretty specific number, but they also want to make sure everyone knows this is preliminary and not yet checked by their auditors. So it's like getting a sneak peek, but the final grade isn't in yet. They're basically saying, here's most of DOSPOR just yet. Scroll item 7.01 capital regulation FD disclosure and scroll. So now this next part is pretty standard. They're also using this filing to talk about something called regulation FD. Think of it as making sure everyone gets the same important information at the same time. So whatever they announced about their financial results, they're making sure it's now officially in the public record for everyone to see, not just a select few. Scroll item 8.10 other events. Tan scroll T. But wait, there's more excitement. They also had some news about a study called the New Day study. They put out a press release and even had a conference call to talk about it. This study likely relates to one of their drugs, and the results could be a big deal for the company's future. The details of that press release are attached as an exhibit to this filing, so it's all part of the official record. Scroll exhibit sex, scroll exhibit 2 roll. Scroll, and just to round things out, the filing includes a list of exhibits. The most important one here for us is exhibit 99.1, which is that press release about the New Day study we just talked about. Plus, there's exhibit 104, which is related to how they present data electronically, making it easier for folks like us to get at the information. Now let's dig a little deeper into the financial story here. The $23 million for ILUVIEN and UTIQ is what they're projecting. We don't have comparative numbers in this specific excerpt, but generally for drug companies, revenue from key products is the lifeblood. If these sales are growing compared to previous periods, it's a strong positive signal. If they are flat or declining, that could raise questions about the drug's market position or competitive pressures. Without the full financial statements, it's hard to say precisely how good a number. $22 million is in the grand scheme of R&I pharmaceuticals, but typically for a specialty pharma company, strong sales from a couple of key drugs can be a very good indicator of health. We'd want to see if this is a step up from last year or last quarter to really judge the momentum. Looking at the overall picture for ANI Pharmaceuticals, they operate in a very competitive space. They focus on acquiring and commercializing products, which means they're often bringing existing drugs back to market or improving their distribution. Their success hinges on identifying good opportunities and managing those products effectively. The success of drugs like ILUVIEN and UTIQ is critical. If these are their main growth drivers, then any news about their sales performance, especially preliminary figures, is a major event. They are essentially betting on these products to deliver consistent revenue. The mention of the New Day study is also very important. Clinical studies are the backbone of the pharmaceutical industry. A successful study could mean expanded approvals for their drugs, opening up new markets or patient populations. Conversely, a study that doesn't meet its goals could mean a significant setback. The fact that they dedicated an item in this filing to announcing the study results signals it's a key development for them. We'd need to read that press release to understand what the study was about, what the results were, and what those results mean for the company's strategy and future growth. For instance, if the New Day study showed improved efficacy or a new indication for one of their key drugs, the Sigmetinate study showed improved efficacy or a new indication for one of their key drugs. That could significantly boost future revenue prospects. At the end of the day, what we're seeing here is a company giving us a peek at its performance with a special focus on its revenue generating drugs. The preliminary numbers are usually a good indicator, but the real test will be when the auditors give them the final stamp of approval and when we see year-over-year comparisons. The health of ANI Pharmaceuticals, like many companies in this sector, really comes down to the performance of a few key products and their ability to continue innovating or optimizing their product portfolio. Now, looking at these results more broadly, Annie Pharmaceuticals seems to be focused on a few core revenue streams. The $22.3 million projection for those specific drugs is a clear signal of where their current financial success lies. The real question for investors is whether this is sustainable growth. Are these drugs still gaining traction, or are they at their peak? The results of the New Day study will be crucial in answering that for the future. Are they finding new life for existing products or expanding their reach? Without more detailed financial tables here, we can't do a deep dive into margins or costs, but the revenue number is our primary focus. For a company like ANI, which might not have the massive R&D budget of a biotech giant, smart product management and strategic growth through acquisitions or new studies are key. Their direction seems to be about maximizing the value of their current assets, and strategic growth through acquisitions or new studies are key. Their direction seems to be about maximizing the value of their current assets and strategically growing through targeted initiatives like the New Day study. A potential risk here is over-reliance on Alright, that's our breakdown of Annie Pharmaceuticals' latest filing excerpt. What's your take on these numbers and what they signal for the company's future? Do you think Eluge and UTARC are poised for continued success, or should investors be wary? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings, and don't forget to join our Discord community for more discussions about these topics. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.